Hello guys, glad to have you on board again. Today I'll try to make some kind of a monthly forecast review. As I have a little bit of available time today, I'll obviously take care of all the messages you've been sending. I'll reactivate the subscriptions and stuff like that all throughout the day. I've got pretty much a lot of things to take care of, so don't mind me if everything is not taken care of today. I'll be off tomorrow, and so it will ripple off throughout the weekend and early next week before everything goes back to normal. Anyway, I'll try to make a global review right now. So we changed month as we're now heading into September. August has been a hell of a month. Depends on what sectors we're talking about, obviously. But let's recap all of this. So I think I've done pretty good cover of the previous week as I was off for some vacation. So I gave you all the informations I was like having a look at all throughout the week on a daily digest somehow, always giving you things in advance. Otherwise, it has absolutely no value. But I gave you the euro-dollar trade, the reversal on the indices, and stuff like that. So, pretty interesting stuff. So we'll eventually talk about that later on. But as for now, we'll take care of monthly. So this is what monthly September has been looking like in cryptocurrencies. Not very fancy kind of stuff, as we've managed to close lower with another upper shadow candle. Still, does that make it bearish? No, because we still can't make it to new lows. We are making inside bars, still tilted to the downside. So I'm maintaining my current course, which means I still expect much more downside in those cryptocurrencies, despite the current motive, which is, and I stand on this, we have fears regarding the economic cycles. Therefore, there is obviously some demand for safer assets, cryptocurrencies included. And therefore, this is the reason why I see the market failing significantly to break down supports. There is like the benefit of the doubt. So I'll need more and more to actually forecast a buyable area for long-term to mid-term traders, as we require the volatility to sharpen and dampen way more than that. So all I would say right now is that, all right, you want to go bullish, then you have to fucking make a candle close on top of 12K, and this is fucking far from what we're currently trading, regarding that the volatility is contracting. So as the volatility contracts, we're making lower amplitudes into the monthly candles, and therefore obviously we expect the ranges to contract even more and even more until we get the violent outburst. So in order to get something tradable for mid-term to long-term, I would expect at least a couple months of low volatility in the nearby area to say, all right, probably the 10K area is somehow buyable in a nearby future, but just not right now. So for buy and holders, just stay the fuck away. There's nothing to do right now. Either you wait for much more attractive prices, or you wait for so much lower volatility. So if we zoom out in the daily right now, the current context and the one I think we're still trading is this indecisible area. In here we had a previous triangle in this area. The market decided to break it down, reintegrate. So either the triangle is just like that, so it's just a wider triangle, or something like that. We've been rejecting 50% of this trend channel, so we still maintain like hope, all right? As long as we stay in the upper area, even though this channel is tilted to the downside, means in here we're in a positive bias. So this is where the negative bias comes in. This is where we also got some targets. So normally, remember the top targets are here for approximately 40 bars. So normally we're locked up with a buyable area at 7.4, and I like that because that's the first fucking element that is highlighting my 7.2K area, where we've got a gap, where we've got a Fibonacci retracement, where we've got a fucking support context. So 7.2K, like I told you, is to me a very interesting technical area, but I don't see any demand in there. So I still need to confirm with the older books demand in here. I cannot do this right now, but I'll eventually do it next week. So if I see rising demand for 7.2, I'll eventually rise my personal interest on this area as well. For now, nothing to do but just waiting to either die in here on this triangle, and it gives us at least early October to actually eventually do something, or we just wait way more than that. What I'd like to see is the market getting out of this triangle, so getting out of mid-October without breaking, or trying to break but without success. So so anyway, yeah, buy and hold, or just wait for at least a month and a half to eventually do something. Otherwise, wait for this attractive price area, wait for some potential signals, or even worse than that, the bottom area of this trend channel, closer to the 5.6K, which is another very interesting technical area. I don't really know what the fuck is going to happen. I can't tell anything about this area. All I can tell is that, as usual, I think the BTC dominance is the key element. I think there is way more to lose in those assets than there is on Ethereums and stuff like that, in which minus 40% just brings us really way lower. So I think if there is some downside, Ethereum is very likely going to dampen this expectation way more than Bitcoin will do, which will obviously bring down the fucking dominance. This is last week's new element. BTC dominance has been making a new high. Obviously, that doesn't come along the expected plan, as I never thought we would be doing such thing, but still the market is is making the decisions, not me, and I never expected this to happen, but still it's in front of me. I never thought we would ever cross the 70 area. We did. I never thought we would reverse a bullish out of the 72.5. We do. So we can go a little bit higher. There is still an area like 75.4 to 73.4. We're getting into this area as we speak. There is a huge reversal potential in here, as this is 61% fib, even though it's hard to make a decent analysis of here, but we've got negative moving averages. Definitely looks like a range. The massive movement is still bearish in here. So ranging means the contexts are now folding again. All right, sorry about that. All right, the contexts are folded again, both supports and resistance. Right, we're having targets not being filled, not being overcome. So I expect pretty much something is going to come sooner or later in this area. So I'll wait for this cluster, like the 64% area, 74%, 75% area. If we do have a strong reverse in here, that will be a sign. I expect this kind of reverse, so not a smooth reversal, most likely something sharp and brutal, like eventually BTC falling like shit, where Ethereum somehow sustains, no more than that. Option number two is pure and simply we find a lot of bullishness in those assets instead of this one staying in its triangle. That's another option, all right? But I'm still expecting a reversal to show up rather sooner than later into this thing. But we're on weekly chart time frame, so it can take like 3 to 4 weeks to actually get to trigger this thing. But like I said, it could be just done in 1 week as well, like a sharp reversal. There will be some sideways activity afterwards, but you can expect a brutal drop into the dominance to significantly get to close weekly below the 70, and that would just give us the information that, all right, we're done, and the top we'll have made is probably going to last for very long. I think probably a few years. But that's never for sure, all right? We never know. For now, BTC dominance is about, all right, the altcoins are shit, Bitcoin is king. So that's the motive, all right? That's the current motive, but you know that's not what I care about. I care about what's coming next, because that's what a trader fucking does. I'm not here to comment whatever the fuck is happening right now. Either I'm profiting from this, or I want to profit from the next move. It's how I see things, no more than that. I never wanted to profit bullish from the BTC dominance, but I see some opportunities to profit from it if it ever reverses. For now, not appropriate timing to do so. Yes, let's talk about other asset classes. I think it's all about the VIX right now for me. So monthly chart still crazy fucking bullish, no matter what you think in here. We can clearly see that. Let me just delete all the fucking unnecessary lines. So last month was bullish on the volatility, still upper shadow tilted, because we obviously don't want everything to fall apart. But this candle has been breaking the previous highs. We're still trying to contract in this triangle, but I mean, at some point, what we're doing this month is probably the lower shadow candle one, in which I think we can go trying to test the 15.3, 15 area. Worst case scenario, I think no matter what, we cannot go down to 13.8, and which means we're probably getting early trade of the month bearish to go bullish, and probably leave a lower shadow candle behind, which means very likely going to break the 24 in a row. Next stop is 27.8, and then this is the area, all right, the 27.30, and if we get to break this area, it's a straight line to 50, and this bigger trend line. All right, so we've got, sorry, it's already in place. So like I said, big cluster in here. If it doesn't work out, next stop is 48, and let me tell you, 48 in volatility is a freaking big mess. And we can go way more than that. If you think 48 is a maximum reachable area on the VIX, then no way. Just have a look at 2008, and 2008 was a credit event. We can go without a single problem into this area later on, right? We can go straight line to 88 afterwards, like we've been accumulating, just like they accumulated back in the days. So yeah, don't expect this market to necessarily stop in the 50 area, but obviously if you're buying the volatility, don't forget to profit take in here anyway, at least securing your trades. What I'm having a close look at right now is how the VVEX is behaving in a shorter time frame. All right, so VVEX is somehow maintaining itself. So VVEX is the volatility on volatility contracts. So consider it the VIX of the VIX. So you know the VIX is speculated, so there are puts, there are calls on the VIX, and obviously we can study how those puts and calls actually behave and how they're spreaded, and therefore we can make expectations, volatility expectations, even if we do this out of volatility all by itself. So consider it like the squared volatility. So it's a pure mess in here, but still we can take out some technical information anyway. So we can see in here the volatility in here has reversed into a bullish context channel, and I think it's hardly going to stop. We're trying to break down, so yes, we're still ranging, but I think more than anything else in here, I think we're accumulating on the shorter time frame to get to burst up. So what I'm waiting right now is the time we get to close higher than the previous day open. So if we could close today on top of 102, which I hardly think is possible, but still, we'll see. So whenever this happens, you're probably going to have a signal to buy the VIX, and probably get to keep the VIX for at least 30 to eventually 50 area. That's my next trade. So okay, so I'm watching closely at the VIX. Obviously there is still an expiration, so the market makers would damn hope to sell the volatility hard to just get to close the September's expirations at the lows, because this is going to be for which is expiration, as we're going to get the quarterly expirations as well. Remember that the VIX has two different contracts. Right? There is the VIX, it's all by itself, which is a monthly expiration contracts, and we've got the VXV, which is a 3 months expiration contract. So we're going to expire VX and VXV later this month. So obviously we would like to close with the lowest possible stuff, because otherwise a lot of people will be caught with backfire. Obviously I'm having a look at the junk bonds, but just having a look, these ones have been showing some pretty nasty reversal the other day. So I'm not saying this, but I think yes, even retracing a bit is possible in here, but I think somehow something doesn't go according to their plans. So obviously anytime we break a support in here is end of the game. We're going to replicate this kind of move and in a faster pace, which means if we go there, first stop is in here, next stop is breaking down this low. And like I told you, corporate credits and especially junk bond sectors are the heaviest danger in the US. Like I told you, you can do whatever the fuck you want. Trump has been building the biggest ever market bubble into credit and into corporate credit, especially. The problem is that corporate credit just in the US is fine as long as they can roll over the debt to the next month, which is great because right now companies can somehow lend money to other companies. So those who are making money are lending money to those who are not making money, not profitable. So they're making somehow zombie companies surviving just because other companies accept to lend them money, obviously with quite some premiums. So the thing is that those companies doesn't die, so they keep paying their bills and whatever. So that's great. They're participating in the GDP just because they're not dying. But the problem is, financially speaking, they're just leaving debt. So it's just waiting to take a bullet right in the head, and obviously these are the first ones they'll be shooted at if anything goes wrong with the market scenario. So if the market reverses, everyone is going to dump the shit first, and obviously these companies will be put under heavy pressures. They'll hardly figure out to find some money, and obviously they will have to bankrupt. And the problem is, when bankruptcy starts to land, the problem means credit's not going to be refunded, which means credit default, which means you know the drill. It's a pile of shit coming, and it's inevitable, obviously, when this thing starts to roll over. So obviously we don't want this to happen. Wall Street doesn't want that to happen. Like I said, they think they can control the market. The problem is we hardly can, and anybody who tried in the past always ended up the same way, with a nasty recession and volatility afterwards. So is it going to be the case? I damn think it is, but still, these are thoughts. I couldn't be trading this without signal. I do have those signals. For now, they're still holding up, but I'm waiting for them to actually fucking confirm, which is still not happening as we speak. So if we have a look at the SPX monthly chart basis, last month I thought we would have it, like finally we could potentially get the fucking bearish reactivation candle, but we didn't. So that's not really good. But what I care about somehow is that the bearish signal has been given in here. This is where we've got a triangle with the candle signal, the huge divergence, and I just never figured it out what the fuck we did out of this, why the hell we found some strength to go higher. But you know, deal expectations, whatever, all the shit you know about. So the thing is that as long as we get to close below those levels, I think we're fine. In here we tried upper shadow candle, we broke it, and what's important is that last month we maintained the previous month high, we clearly broke through the previous month lows. The problem is we still tested those supports. So consider those areas as support. So there we build some support. The bulls have been buying, and they probably will try to support the price before they actually break down. So this is why this area is an area of interest in which the bears will risk manage. Like I said, we're not going to switch bullish. All I'm going to be doing is just risk managing, just in case it actually reverses bullish. But we've tested this, which means anytime we go back there, it's the end of the game. This is where we're going to handle closing and holding the closes at lows, and this is probably where the worst part will start to trigger, at least where the bearish pressure will express itself into its deepest forms. So what it means is that if we go intraday right now, this is the areas I told you guys to have a look at. As in here, no signals, but I said, all right, I like this kind of reversal, this upper shadow candle, market breaking down the day right after. So I told you, all right, have a look at potential range trades in this area. It was probably 1 hour trades in this area. Let me just figure this one out. I was off during the day in this area. So no, it wasn't 1 hour. You had 15-minute signals eventually, I think, in here. So 15-minute trades. Let me just, all right, that's exactly. All right, so you had your 15-minute exits, no confirmation. So no, actually no signals in here, and you had a bullish signals reactivation in here anyway. So no, as you can see, I told you to look for this area for potential signals. You can see the indicators doesn't give signals just to please you. They give signal whenever the conditions are met. In here, absolutely not. The momentum said, all right, I've got something to trade, but price is still, all right, no way. There's nothing to deal with bearishness in here, obviously. So the thing is that, all right, if this area wasn't working, I was looking at this area. I'll tell you what this is. This is just a pitchfork, standard pitchfork. So if we get to reverse in here, you can be damn sure that the next stop is the bottom line of this pitchfork and probably breaking it lower. But still, for now, it's hardly manageable without a risk management. So it means we need to speculate, which means we need to find a fucking context to do so. And this is what I exploited today. So earlier, as I was jumping into the plane. I got alerted because I had an alert on this price level. So I saw the alert. I said, oh man, no, I can't believe we're going up there. So I saw this and I said, oh, pitchfork as well, great. So I need a signal, obviously, but the problem is I couldn't match one. And I said, all right, damn it. I feel like I'm going to go into the plane and the market will reverse because the European session is likely going to be sold. So I said, no way, I'm going to take the trade and just see how it goes. So I got 1 hour just not to trade anything, just not to trade out of just imagination, right? You always need to trade out of something. And I said, all right, we've got this target, we're overcoming the bearish resistant context. So I think I've got more than enough. And I decided to press the button. So I gave you the notification. I had 29.68, so pretty decent price. Way too early to do anything else. I'm just going to secure the trade in here, but no more than that. I mean, I'm just not going to put the stop at break even. I'm not even profit taking on this trade, obviously. Stop loss is set out of the previous market top, right? We're looking at a bearish reversal. So if we ever get to this resistance, I'm out. So 3,000s overcome and I'm out on this trade. That's a reinforcement swing trade. Remember that I took this area. I'm taking this one. I'm not yet leveraged. I'm soon to be. And like I told you, this is where the big things start to happen to me. This is where I start piling the bearish position, 28.80. 8 is exactly the price I've been putting my orders at. So 28.88 is where I start bearish breakout. Call that a confirmation. All right, so whenever we get there is where I reinforce the position, put my stop losses in here, and I'll probably start to be leveraged at that point. So far I'm not. All right, so I'm standing still. Right, all I know is that getting in here, I'll be able to lower the stop loss. That doesn't mean the market will necessarily break down in here. All it says is that I'll be gates open to lower my fucking stop losses and decide whatever the fuck I'll do here. If I see bearish breakout opportunities, I'll take them. I'm not just going to take a trade in here. Right? I need you to understand that, because we could very well do something like that, like getting in here, pulling back in there again, before going lower. So don't think that this is the end, that this is about time to go fully in and stuff like that. It's just about time to take a fucking reinforcement. End of the game. No more, no less. All right? Simple as that. What else do we have to talk about? German index. We've been closing the gap. That was something I told you to wait for. This is now done. We've got a 4-hour target in a resistant context. Definitely the kind of trades you want to take. In here, the structure is pretty dangerous. Let me highlight that. So first wave, second wave. Actually, this one terminated earlier than expected. I thought this wasn't a pullback, but it actually was. So we're now doing this. All right. Have a look at that, how beautiful that is. It should start to ring a few bells. All right, so we're overlapping wave 1 and 4. And wave 1 is approximately the same length of wave 1, which means, all right, this is wave 1 length, this is wave 2 length, all right, approximately similar sizing, wave 1 to 4 overlapping. So if we're reversing in here out of this target, means we made early ranging bearish activity that we're going to trigger a trend out of, typically wave 5 extended structures, in which the final wave in here will last longer and will dip far lower. All right. So German DAX, I'm taking a bearish trade. I gave you the price earlier today. I took 12,122. Sorry, I gave it live to the French users. I mean, anyway, I'm not cheating otherwise. God damn it. So you can think whatever the fuck you want. Actually, I don't care. So the thing is, if we do reverse in here, I'm expecting new lows, which means I'm expecting to dip at least below the 10K on the next run. So this is obviously a swing trade, which has a stop loss in this area. Remember that trend trades, you can put your stop loss out of the previous resistance, obviously. So if we get to do any candle close on top of this, is my invalidation level. So this is what I can do. All right. This is invalidation with a stop loss if we get to close. It's not reinforcement. There's no reinforcement on the DAX. My first position to the downside. So I'm targeting early activity on this trade. Just have a look at what it does on monthly chart. So even Wall Street trying to save the fucking dip, it didn't really work well for the German DAX, who's been closing below the previous month lows. So like I said, these kinds of candles, they better hope they're going to be broken up. So we definitely need to break up the 12.2k in the DAX. Otherwise, bam, another set of bearishness, and we're probably going to retest the previous lows with very high probabilities to break them down. That's simple as that. I'm sorry to say it, but like usual, some people don't want to see bad things. Like I'm a perma bearish guy. I wanted to sell indices forever. Yes, I might have had a perma bearish bias, a bearish bias later, like years ago, like 5 to 6 years ago. I'm freakingly figured this out in the meantime. So just stop calling me a perma bearish guy. That doesn't even nearly make sense. So just think a little bit more, be smart. And it's just I'm selling because we're in a selling context. So if this is a bullish market to you, then all right, keep it bullish until we break this low. And if you switch bearish in here, you know what? I'm going to start profit taking when you'll start selling. So just be dumb, all right? Just try to trade whatever happens rather than anticipating whatever will happen. And I wish you good luck in the market, because I've seen so many people doing this, but not many of them making money. I've seen obviously many of them losing quite a shit ton of money on the opposite side. So if you're seeking truth in markets, then you better have to be good. Otherwise, you're most likely going to end up with the losers. It's really simple as that. Markets are meant to be anticipating stuff, which means taking risk. If you don't take the risk, if you don't anticipate, if you fear of being wrong, then all those things just basically lead to at least not reaching your goal. Like I said, if you want to be truth, then be an analyst and be paid to talk. But if you are trading, meaning if you're exposing your own money to the markets and expecting to get positive returns out of them, then you rather like go speculators instead of going analyst's way of trading. Anyway, that's not the point. So let's go forex. We've got a lot to talk about. So yesterday I profit took on the gold. We're reaching out monthly targets, even though I tend to believe we're very likely going to overcome them. It all depends on whatever the fuck the dollar will do. Still, I took profit 25% on the gold. Very nice profit. I was leveraged, so I'm back at normal levels. Remember, I already took a previous profit taking a few weeks ago. It was, I think, 1520 or something like that. It was 4-hour target, so it's going to easily be recovered. I think this is where I made my previous profit taking. I don't remember. Yeah, I think it was there. So first profit in here. I'm taking another layer of profits. I've been taking another layer of profit yesterday. And that's all I'm going to be doing. I expect probably another 25 if we ever go 1590 or something like that, without a breakup, which means if we just go in here with range activity, I'm probably going to take a little bit more profits. I've done the same with silver, even though my actual price target was a little bit higher. I think we can still go higher, but it's just regarding the timings and the signals, I just decided to press the buttons. I mean, profit taking is always way more convenient than entering, because it's more like, all right, I could probably target a little bit higher, but I don't really necessarily care about that. It's just I was leveraged. I rather like to unleverage those trades. I'm still bullish. I'm still having gold and silver in the portfolio, just no longer leveraged in the position sizing. Let's talk about Eurodollar, GBP, but let's do it with the DXY. So I expect this guy to make a big move. I don't know why, I don't know when. This is what we have on the monthly chart. So a lot of people expecting this to be bullish because we already broke the previous month highs. And some people say, all right, we have a few months to work around. Let me tell you, I don't think we do. So we overbought into a trend channel with a lower high. All right, call that bullish. I call that freakingly bearish. So we're trading the weekly resistant context. Like I said, as long as we don't handle a fucking candle close on top of those areas, it means we're still rejecting the context channel, and either we manage to do it this week, like if we can be bullish and manage to close on top of 99, then I'll say, all right, this scenario is no longer a bearish range, but just probably a neutral range, and we'll have to wait for at least 100. For now, as long as we're here, we try hard. I cannot stress enough how hard they tried. It's just crazy. I cannot even understand how this thing sustains itself. But all I can tell is that no matter what, if it ends up losing just one time, it's never going to come back. Like I told you, this is going to be instant trending in those contexts, because if we're reversing here, it's a straight line to support contexts. And the support contexts are pretty fucking low. And whenever we ever get to try this area, I don't think it's going to be bullish. I think this area is going to be straight line bearish as well. So I see very low level of support in those support areas. I see very strong resistances in here being tested. So we don't know yet whatever is going to come out of this. All I can tell is that in the current stance of this market, we would have a squeezing bearish signal into the expectable tradable area. So it would just be like in here, wrong signal with this ugly evening star pattern, which I tend to, it was clear, all right? I got leveraged, just not fully leveraged on euro dollar, but I started to be maximum speculative leverage because I thought this was it, all right? That in this area I would be able to reinforce, eyes closed, and I got proven wrong. The fucking euro dollar and GBP got to take me out. At least I had to pull over those reinforcements and take losses associated with them. I don't like taking losses, but obviously when I take too much risk and the market proves me wrong, I'm not just fighting it. I can fight the market when I'm not leveraged, when I'm speculating. There is a decent amount of room I give into my position sizing to eventually work out some dangerous areas when the market is trying to cheese the stop losses, and I just don't want to be among those who are going to be trapped. I can work this out, but when I'm leveraged, I don't gamble. I'm not playing. I didn't fucking knew whatever the fuck will come out of this. We could have just accelerated straight line and be at 100, and I would be significantly losing some money. So I wouldn't be doing this. So I took my partial losses, waiting to get further informations. I told you just a couple days later, all right, euro dollar is not accelerating. I get some bullish signals, so you can start reversing that shit. And I got you probably one of the 1 hour to 4 hour trade perfectly in here. That was just absolutely easy to take. All right, so it was reversal trade, usual stuff. 4 hour target, all right, approaching the 4 hour target, so you know what to do with it, all right, when you're late stage trending. So either this would have been a breakout target, all right, in which in this area instead of reversing we would have accelerated, but that's exactly the opposite. Once again, the market fails on fucking targets, which means even if you think this is trending, this is not. So euro dollar, even if you think it's bearish, what it tells me is that it's not, and we're very likely going to fuck up this trend channel. Because if there is no trend, we're going to have to fuck the trend traders. So normally, next stop is in here out of 1.11. This is where we'll risk manage 50% trend channel or 50% context. And if we ever fucking manage to get higher, then finally the trades will actually get to trigger after so many traps, so many attempts. And like I said, I don't mind if the market tried to trap me so many times. All I want is to be fine when they ever get to release the energy into the direction I want to profit from. I don't care how long it takes. I know it can be stressful, painful, whatever. I do risk management. Yes, this one hasn't been done perfectly. It came along with some losses, speculative losses, not tiny ones. I told you I took 3% loss when I triggered my stop loss on the GBP USD the other day. So it's not tiny losses, but still there are speculative kind of losses. I'm not losing 12% or stuff like that. These are no drawdowns. These are not mistakes. This is just mistake on risk management. I was in too early. I was too aggressive too early. But also you need to be aware of that. When you do this, you also maximize the profits. Imagine that in the next in those latest days when we did that, right? If instead of pulling back in here and breaking down. If we found some support in here and went there, can you even imagine how much I would have made? So it is not stupidly buying because I want the market to go up. It's just I think there is decent amount of chances this go up. I had my signals, I had everything I needed. It's just the market decided to go otherwise. And like I said, these are just traps to me. We have absolutely no reasons to go lower. We just do because there's too much people buying, though we just get to take down their stop losses. And I thought I would be fine to survive this. The reality is I wasn't. So it was simple as that to me, all right? I was wrong. I had to take a loss. It was just up to me to defend how much I wanted to lose. And like I told you, I reinforced the other day. When I gave you the trade, you think I didn't take it? I took it as well. So I took somehow a loss in here and just put it the exact same amount of money in here. So it's just, all right, too much risks, I'm out. All right, the risk is limiting, I'm back in. It's simple as that. It's really as simple as that. But the difference is, in here, I don't know what the fuck is going to happen. In here, I limit my risk. It's all I can tell. All right? USD GPY, I'm going to make it simple. So like I told you, DXY, if we ever get to reverse and break down the fucking support, because that's what we need to do now. Anytime we get to manage to break a support, this is going to be settled. So we're going to work out this area, and I expect that we're going to go lower. If we do, then just have a look at how long the accumulation have been. All right, like I told you, we've been talking about that quite long. 1, 2, 3, 4, 5, 6, 7, 8. We're on the 9th swing in this fucking trade, which means very, very long accumulation, a lot of energy accumulated in here. Don't expect any support in this area. Like I told you, if we go bearish, there will be no pullback. At least don't expect pullbacks in here. There can be some, but there can also be absolutely none. So US dollar to me, I'm waiting for confirmations, but now we have an ugly reversal structure, divergent pattern, targets. So it feels like something like that. So I expect anyway, we'll have to break down the support. We'll have to test this area, and if this one holds up again, then eventually we'll have a pullback. But if this one just breaks in a straight line because, I don't know, eventually because of the stock market falling like shit in the US, because, I don't know, Chinese deal totally going out of control or whatever, I don't know. All I can tell is that I'm waiting for something to fuck up the dollar. I don't know yet if it's going to come. I just know I'm trading this way. I'm just waiting for the goddamn time this will actually get to trigger. So far, I just don't know. So risk management, not leverage position, and don't play God. Don't try to fight the markets. Or if you do, just do it decently and don't do it stupidly. The yen index, same thing, really interesting in here. Monthly charts, just, all right. Very hardly going to be questionable. So the trend is setting itself in here. We've done the pullback. Everything is taken care of. So this trend line in here. Oh shit! What the hell is that? All right. Yeah, much better. So the thing is in here. All right. That's what I wanted. What the hell? Something really ugly happened. So we're probably breaking this resistance. As we're trending in here, we clearly do. We've got the high lows. So it's more likely daily trends setting themselves. So now we have very few bears in here, and the bulls are targeting higher than the previous resistances. So this level, at 96, we're definitely going to break it. It's just a matter of time, and I think probably by the month. So bullish yen, bearish dollar means, oh, dollar yen is probably going to be the top pair for the week and months to come. So I'm just waiting for this to set itself. I think it's just a matter of time. Yen index is very likely going to break that resistance, like breathe in this area, but we're probably going to break this one as well. In the future, it's just hard to say whatever the structure is going to be. We've got multiple options. So remember that the market never tells you what it's going to be doing. Remember that. Oh, sorry, that's not what I meant to be doing. All right, so remember, all right, bottom to top, it's been lasting this long. Bottom to top, if we reverse in here, we would have approximately similar sized things. All right, so if we get to overlap this level, we're going to have an extended fifth wave. That's also an option. So if you think the yen cannot be bearish or whatever, it can retrace a bit for a few weeks. Approximately the same stuff like we did before, right? So a few weeks. So remember that this is not open door. This is the reason why I also limited my risks on gold and silvers and stuff like that. All right. I already profit took on the USD GPY. So I reduced the risk on all those pairs, but still I expect way more gains, as I don't think those moves are over. I think the best is still to come. Option number 2 is that we're still in the trending wave. In this perspective, this wave is going to be longer. This wave is going to be the one that breaks the resistance, and we're just going to make the final wave 4 and 5. So we can definitely be in this structure as well. So as you don't know, why the hell would you profit take entirely in here? No, I think it's just a matter of risk management and just requires like 25% profit takings. Just to make sure that your stop losses must be set no further than that, and it must be paid, right? So the higher the leverage, the higher the stop loss. Obviously, the higher the risk you take, and also the highest rewards you're going to get in the end if it works out. So it's also balancing those stuff. That's risk management. That's what you guys need to figure out when you get to process. AUDNZD is a pure is a pure trade. So we're up on the resistances. I think we've barely traded this area in which we had some early bearish signals, like risk management signal for the bulls. Market totally ignored them, like, all right, we don't need. So I think anyway we'll have some pullback in these trades sooner or later. It's just I don't know how much, and all I can tell is that this is most likely daily, all right, daily risk management. So as you can see, we're starting to have reversals, no signals, so probably just pullbacks. I think we've built a support in here, we can retest it and probably be bullish out of it. So I expect more bullishness in here rather than bearishness. So this is why I'm still bullish in this asset no matter what. I just reduced my leverage, paid for my stop losses, and now I'm riding the trend, just waiting for it to set itself. There is no trend until we break this trend channel, so I'm still waiting for us to at least try to break this resistance, not necessarily going straight line, but just breaking this level, going on top of it, and then I'll wait for retracements, and I'll try to catch the trend channel, right? So that's the plan, like context, trend channel, trying to support these areas, getting leverage, getting fully leveraged in here, starting to leverage up in here with a safe paid stop loss, so reinvesting some risk in here and going fully leveraged when we break up this area, all right? When I break up the resistant context is where I'll be fully leveraged on AUDNZD. So don't think we go straight lines. Yes, we've gone straight lines so far. Yes, we can keep going. Reason why you must not exit the trade, because if you think, right, Phil just said we're going to reverse in here and buy in here, so why don't I sell it all in here to buy it all in here? I will be way more profitable. Yes, you're also taking way more risks. So you're also not accounting the probability to just go straight line. So if you're profit taking here, where the hell are you going to buy afterwards? Right? And if we keep on going straight line like that, if we like totally fuck up this area with a straight line candle with a catalyst or something like that, all right, so many options. All you need to do is to manage your way all throughout them. Not trying to forecast the future magically and assessing the price will reverse in here and then it will reverse in here. Just highlight freaking risk managing areas and just do your fucking job. If price reacts according to your plans in those areas, do trigger the fucking trades. Then manage those trades, profit take when everything goes fine, and the market hits your targets. That's as simple as that. Regarding the stocks themselves, I'm not going to cover this one up, despite the fact that I see an early interest into General Electrics, and I'm following this one very closely in the following days. We're testing back the previous support areas, the one that was kind of a very long flat range, and the market just tried to overcome it to the downside. Like I said, I didn't really like that, but still the market failed to go to the target. We're retesting the breakout level, so that's a good sign. Probably another range signal in here. So either the range is going to extend for a longer period of time, or this thing is just a trap and we're going to reintegrate the previous range. And if we do, then you know that there is a freaking safe stop loss in here, which means you know what I'm going to be doing. I'm going to take another speculative trade if we have a bullish breakout, which means I'm going to wait for a breakout trade probably in here. And I'm probably going to breakout trade this area on shorter time frames, probably 1 hour signals or whatever. But if we do get the bullish breakout in here, I'll bullish breakout, risk manage on the 1-to-1 ratio. Remember that. Breakout trade, stop loss must be set in here, which means I'll breakout trade, profit take 50% of the position, pay for the stop loss, and let it go with the rest. All right. What I'm waiting for is the moment the market in here will try to break up. It will probably give me a target in here, and I don't know whatever was going to come out of this target. Either it's going to be a range target, and I'm going to retrace and work out the range back again into a weird structure, or option number 2, trend, we get further, and then I'll get gains. Simple as that. But anyhow, I'll take no risk, as I'll be probably filled with my first profit-taking area. All right. So far really early, but I'm just saying it out loud. Obviously, if the market is paying for value stocks, I'm really curious to figure out whatever they're going to be doing, with the riskier stocks, all the Facebooks, the Nvidias, the Netflixes, the Boeings, all those big growth stocks. If they start to fall and the value stock starts to rise, you know what's going to happen. Normally, you're going to have a Nasdaq dying, and you're probably going to have a Russell dying, but dying less, all right, which means the market heading toward recession. When the growth stocks are underperforming and the value stocks are researched, means no matter how, no matter what, investors figure out they're not going to be bullishness for at least a few quarters. So that's what I'm waiting for. The moment the market switches to trigger retracement on safer assets, which means, all right, we'll go in recession. It's not about time to grow stocks, so let's get the hell out of those shits. Let's try to go safe instead, where we can actually make some value, and this is why we call them fucking value stocks, which means even if the market is underperforming or losing grounds, we need to be somewhere. You need to understand that most of the pension funds or whatever needs to be invested wherever the fuck they want, but they cannot be cash. They need to be invested somewhere. And if those guys figure out, all right, staying in those shits means we're going to lose a shit ton of money because they're going to fall straight line, then we don't want to lose money. We rather like to either start gaining a bit or at least balancing the losses. That's all they're going to seek if they forecast a recession to come. So if a recession solves up, you can be damn sure that those value stocks like GE are going to be goddamn researched, because those guys, they will put their money in here thinking that's the safest assets. They've been oversold, so all they can do is either stay there or retrace, and they'll start to get some value, or at least not losing too much value. And that's why they call them what they are called value stocks. They're not meant to be profitable. They're just meant to be balancing some losses elsewhere, or just at least expecting not to lose on them. So why I'm buying General Electric, why I'm talking to you about this buy and hold for quite some time, because there's not that much to lose in here. The worst has already been done. We've already been failing on some targets, so there is a fucking range. I just wanted to know whatever the fuck the range structure would be. Now I can hardly say, but I'll start to feel like it's going to be something like that. So I'm not necessarily sure that the 16 area is going to be reached out to. It still requires to validate this goddamn area first, but if it does, you can be sure I'm going to be using my usual Fibonacci's extensions, and I'm going to target wave C, which is the 107, so I'm going to target 14, and probably in here, like I said, we eventually, if they're really researched, I'm probably going to target this area. So it's going to be 15.5, no more. All right. So 16, not in context anymore. Probably just going to be like 15.6.5, and that's good enough. I mean, that's good. I'm still making a gain out here without taking too much risk. That's all I care about. It's just whatever the gains I want to take, or I will eventually forecast to take, I don't want to take too much risk for this gain. It's simple as that. All right, and even the ugly trades I had from 12 area are going to be profitable, and I think the amounts of risk I've been taking for them wasn't that much. Yes, I hold it up, and I probably will hold more losses than the gains I'll make, but still, in terms of risk management, I think I took less risks than the positive rewards I could get. We're still far from being in there, all right? So no one knows, and it depends on the structure we have in here, obviously. But normally, I'm going to be targeting something like that. So the trend channels and Fibonacci extensions near this channel, and something like that. So like I told you, yeah, probably 127, all right? And it's not going to be straight line, all right? This is just pullbacks, and we're targeting fibs, simple as that. So first fib is in here. Shit. 33. There's going to be a 38. I'm never going to target any more than them. Right? These are mandatory profit taking areas. All right, so like 16, we can go there, right? Just to test the Fibonacci. But anyway, 15.5, I'll start limiting the risk anywhere in there. All right, you know all about it. If you want to have a close look at Apple, because I would say managing the Apple versus General Electric is how the market is going to behave. So I just show you what last month was for Apple, breaking down the previous month low, holding a bearish close, still not below the previous month open, so it's still not yet fully bullish, whatever, but we gapped down earlier this month, so all we can do right now is try to retest this area. So the best would be 2013 for another selling entry for me. The worst case scenario is that we just test the previous close, we go bearish, and we fuck up the previous lows. So 193 is a confirmation trade for Apple. So we go in here, it's a reversal confirmation, and that's definitely not the best case scenario for them. All right, getting in here means probably getting in there afterwards. Like I told you, 116. That's what it's worth to me. It's worth no more than that. And no matter how crazy bearish you think that can be, and you would say, nah, that's not possible. Right? Do you think Apple has been changing so significantly since 2016? No, it hasn't. So we can just retrace to those prices and make absolutely no changes. To me, that's no more complicated. People want to make it complicated because they just want to see what they want. They're just seeing what they want to see. So yes, they think something that is bullish is hardly going to reverse because we just want to keep things going. That's what humans have been meant to be doing. You need to get the hell out of these kinds of mindset if you want to be speculating. Speculating is just anticipating the next move, and the next move can just be bearish as well. And like I said, to me, we terminated the bullish cycle. We pretty much expect two sets of consolidation. The first one has been taken care of. We still have the second one to take care of. Anyway, this is to come. So look for those big values, the GE to Apple ratio. We could actually do something like that, like Apple divided by GE. That would be interesting to have a look at that, actually. Let's see what that does. Let's show me this ratio. Yeah, that's pretty interesting some way. So as you can see, when this one goes down, means value stocks are interesting. Investors are more interested into value stocks than they are into growth stocks. So same thing goes in here. If we ever get to break down this ratio, break down any support in there, it's going to activate this double top, so which means we're going to go way low. And same thing, right? It pulls us back to 2017, 2018 mood, right? In which since 2016, that's really interesting actually. Just have a look at that, right? You can see growth stocks versus value stocks. You can see, yes, the growth stocks were interesting, but some stocks have been crazy overvalued over the last few, let's say 2016, all right? Trump's election has been pushing some growth stocks to some real stupid values, really stupid values. Is there still some room to the upside? Yes, obviously, because nothing is certain for sure. Nothing's ever certain. But at some point, everything has an end as well. So I'll tend to say in here, what we've got is not a good sign at all. So probably eventually a double top reversal. We'll see. Anyway, like I said, the more they're going to buy General Electrics and the more they're going to start losing grounds on Apple, the more these things will sharply fall. Sorry. Anyway, I'm not going to go 1 hour long, so see you guys later. I'm not going to be there tomorrow, you know about that. See you guys again on Monday, but normally you should be fully prepared for all the shit that may happen until the end of that week. You know, ADP, NFP, lots of things that come forward can be impactful regarding the dollar. It's still hard to say whatever is going to come out of this for now. Bye, guys.